Now we come to the actual computation, the Excel part. Here in front of us, we have the financial statement of Panchak Corporation Public Company Limited for the year 2023 and 2024. We want to analyze and evaluate how well the company manages its sales growth rate. And the methodology for that is to get the actual sales growth rate of the company and the sustainable growth rate of the company, compare, and then discuss the implications of any differences between the two growth rates. So step one, we calculate the actual sales growth rate. And that requires us to get the sales amount, sales and service amount for 2 consecutive years, 2023 and 2022. Now we take the number from the income statement of the company. First, start with equal, open the PL9, profit and loss statement. Sales revenue is on row number 9 for the year 23, column E. And for the year 2022, we get the number from the same source, the profit and loss statement, that is on row number 9, column G. So now we have the two numbers. We can calculate the actual sales growth rate. That is equal to, we open bracket, the sales of this year minus the sales of the last year, close the bracket, we divide by the sales of last year, and then we make it in percentage. 20%. In 2023, the company's sales and service revenue has increased by 20% compared to 2022. Now, in order to determine whether that growth is high or low, we have to take the next step, and in the second step, we calculate the long-term sustainable sales growth rate of the company. So step 2, we have to calculate SSGR, which stands for Sustainable Sales Growth rate of the company for the year 2023. First, we have to write down the formula for calculating that. SSGR for 2023 equals to RR, retention ratio, multiplied by NPM, or net profit margin, for the same year, multiplied by total assets turnover, TAT. For simplicity, sometimes it's called AT, asset turnover, multiplied by equity multiplier. This equity multiplier must be based on 2022, the previous year. Now we write down RR equals to retention ratio, which indicates the percentage of the profit reinvested in the business. It represents the internal source funds, profit available internally. The second is NPM, that is an acronym for net profit margin. Net profit margin represents the efficiency of the company. Efficiency in terms of controlling expenses. You may recall from the lecture that sustainable sales growth rate depends on operational capability and efficiency of the company and financial resources. Now, RR, retention ratio, represents the financial resources, internally available funds, the proportion of the profit not paid out, but rather reinvested in the business. Net profit margin represents the operational efficiency in terms of controlling expense. TAT, or total assets turnover, also represents operational efficiency. It shows how much sales the company has generated from every $1 invested in assets. It highlights the productivity of the assets and the effectiveness of the company's marketing campaign or marketing strategy. The final variable is EM, which is an acronym for equity multiplier. EM here represents the financial leverage of the company, the extent to which the company has used debt financing in its asset investments, in assets. Funds may come from debt or from equity. So EM indicates the extent to which a company has used debt financing in its investments in assets. Now, once we have this, our first computation would be, as the formula indicates, retention ratio. RR is equal to 1 minus dividends payout ratio. Dividend payout ratio. Second formula is the NPM, net profit margin, equals to net profit divided by the sales amount or sales revenue. Third is TAT, equals to the sales amount divided by total assets. And the fourth variable required here is the EM. EM is total assets divided by total equity. Now I have the variables I have the formula. Now I have to collect the data. We begin with net profit amount for the year 2023. We can take that number from the income statement. PL, second sheet. Profit for the year is on row 35, column E. That is the profit amount. Second is the sales and service revenue for the year 2023. We can get that also from the same income statement. It is called the top line. That's on row 9, column E, 374 billion. These currencies are in Thai baht. The money for Thailand. Thailand's money is called Thai baht. So the figures that you see here are all in Thai baht. Now, we need also the total assets of the company. Total assets of the company. We take that from the balance sheet. It is on row 36, column D of the first sheet, PS 628. 340 billion. We must also have the dividends paid out. Dividends paid, that is the percentage or the amount of cash dividend distributed among the shareholders. That number is taken from the statement of cash flow. Say equal, we open the CF sheet, scroll it up, we go to the financing section. So it is on row 94, column C. The number on the income statement, on the statement of cash flow is negative because the company paid. That money is received by the shareholders. So we multiply it by -1 to change to positive. We only want the amount. Negative sign represents payment the company has paid. Now with this data, we can calculate the ratios. We start with the dividend payout ratio. Dividend payout ratio, DPR. Dividend payout ratio equals to dividend amount divided by the profit amount. We make it percentage. 27%.